Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, going to be looking at the volatility index here on the daily and the weekly time frame, VIX, TVIX, and XIV. And a lot of times people are looking for clues in the VIX to apply to the S&P 500 in terms of direction and what to anticipate in the short-term future. Personally, I don't find that correlation strong enough. There's way too many times where people that do look for that correlation are scratching their head and saying, you know, why is VIX doing this if the market is doing this? And if you do look for this correlation and you have found it useful, by all means share your experience, and I'm certainly open to that. But personally, I just treat them as separate entities in the sense where we've got SPY, and I'm going to use the SPY chart looking for the S&P 500, and I'm going to use the VIX chart if I'm looking to chart VIX, and not really looking for clues into one to indicate what to expect in the other. So VIX, what a point there is that the past 2 days the VIX has gone up, and today we had SPY going up as well in the morning, and in the past 2 days, the majority of the past 2 days, the S&P 500 and VIX were going in the same direction, and that of course changed by the end of the day with SPY closing weak, but we closed strong here on VIX. So what we're looking at here is a big pop, and people that do play volatility, by all means, short term is the way to go in my opinion, because these pops do not last long. We are in a bull market, so we are in a long-term downtrend in volatility. And you can see even this big move to the upside, it was very, very short-lived. We had quick profit taking, and that seems to be the pattern with people taking profit very quickly. And of course, with instruments like TVIX that are leveraged, you have time decay to worry about, and we'll see that on the weekly time frame. But as for VIX right now, we have a couple higher lows of support that are forming, and I'm looking down at the $11 psychological level, and we've bounced off of that level. Even though we've dipped well below it many times in the past 2 weeks, we do continue to close above that level. So $11 is a support. Our recent higher low is 11.03, and in terms of resistance, I'm looking at 12.54 and 12.67 before there's some upside room where the bulls are going to look to head back towards those recent highs. But we have been rejecting from the upper Bollinger Band the past bull breakout. You can see every single close was either right at the upper Bollinger Band or below it, even though we got well above it during the trading day. So that upper Bollinger Band on the daily time frame is a resistance level to be keeping an eye on to look for closes above it. And we can see in the past 3 months we did close above it one time, and other than that, every other time we do reject. So just looking at that previous history, we can say, okay, going forward, if the price is at or above the upper Bollinger Band, we know that history and the odds has a rejection likely coming. So on the weekly time frame for VIX, we have all kinds of moving average resistances to be looking at, and we do have this base at $11. Again, you can see how many times we have bounced off this level. We did close below it a couple times here on the weekly time frame, but more often than not, same thing. Look at the history. If we're at $11, more often than not, we are going to bounce from this area. So lots of moving average resistances to be looking at, and we can see we're in a downtrend pretty much all of 2016. The longest bounce that we have seen has lasted 3 weeks, and then we have a 1 week bounce, a 2 week bounce. So they are certainly not long term, and this is not an instrument to be going long on, in my opinion. It is a trading instrument, or you can go long on it if you are shorting it. But right now we have all these moving average resistances on the weekly time frame. 1358, we've got the upper Bollinger Band at 1380, the 200-week resistance 1503. So the bulls would have to do a lot in order to turn this thing around on the weekly time frame. So TVIX is the same story, and it's even more exaggerated to the downside, where we have the time decay factor as well, as this instrument is designed to go to zero. Combine that with it being in a long-term downtrend, because we are in a bull market and there are lots of downside gains to be had. There are a lot of traders that short TVIX and UVXY, and that's just their ATM machine. That is their basically their income, their guaranteed income with how we have been trading over the past couple of years. So continuing lower highs and lower lows, we saw these short-term bounce. We rejected from the middle Bollinger Band resistance, and we hit a new all-time low. Potential bear flag on the daily time frame right now, and we did close up near the high of the day. And that would, if we were to get over these exponential moving averages, whenever I'm looking at bear flags and bull flags, which comes after a dump and then a weak bounce attempt is a bear flag setup, and a bull flag is a breakout and then a healthy consolidation pullback. But what I look for is these exponential moving averages. So as long as these exponential moving averages on the daily stay resistance on this weak bounce attempt, the odds of a bear flag are a lot more likely. So I'm keeping an eye on the 8-period exponential moving average resistance on the daily time frame. And again, we did close up at the high of the day, so momentum is favoring the bulls heading into next week. But if we can't get over that 8-period exponential on the daily, we are going to be looking back down at that all-time low of 32.90. And if we were to break that level, it would indicate that we have a confirmation of that bear flag. So the weekly time frame, very clearly in 2016, if you are going short on TVIX, you are making money. That is a very clear trend. And with the reverse splits involved, let's go to the 1-year time frame. We're at the end of March. So we were up at, let's call it 1200, right in the middle of the range of that week. And again, the reverse splits adjusting for that price. But if you're at 1200, we have lost $1,165 of that to the downside. So the bears are very clearly in control. And again, we have only seen 3 green weeks in a row has been the most bullish move we have seen on TVIX in 2016. And we had a 1 green week, 2 green weeks, but clearly the bulls are not doing anything here. And we've been rejecting from these daily exponential resistances for the past 5 months. So the bears are in absolute full control. We continuously hit all-time lows, as we will continuously hit all-time lows as long as this instrument is trading. XIV is a way to play bullish the volatility index. If you don't like shorting, you can play XIV. So XIV recently hit a new higher high, even though the S&P 500 is nowhere near hitting its all-time high. So 75.41 was the high, and we broke it to 75.48. Not a very convincing break, but it was a higher high, and now we are consolidating. And it's the same story where we have the potential for a bull flag. We have our breakout, our normal healthy consolidation. The only thing that the bulls would like differently is less volume on Friday. They want to see decreasing volume on consolidation, and we did have that little uptick in volume and a close at the low of the day. So momentum is favoring the bears, and we're going to test this exponential moving average support, the 8-period here, and it's the same story. If we lose that level, it's a lot less likely it's a bull flag. If we can hold that level on Monday and head back up towards the highs, then the odds of a bull flag are likely, and a bull flag pattern indicates continuation if we can hold these exponential moving averages. So XIV has been in a big-time uptrend in 2016. And the pullbacks, the most significant pullback lasted 3 weeks. So it's pretty much the exact opposite of TVIX. And the bulls are in full control. We've been holding the exponential moving average supports on the daily time frame since the election. So once we lose those weekly exponential moving averages, that will be a red flag to the short-term bulls. But as of right now, the bulls are doing a good job of defending it, and we can see the only 2 red weeks that we have had in 2017 have lower wicks, with the bulls buying that dip off of those exponential supports. So the bulls are still in full control of XIV, and we are watching for the bulls to remain in control. And we'll be keeping an eye out for signals that that is changing, but as of right now, there is no signal that that is changing the trend. So thanks for tuning in. Hope you have a great rest of your weekend, and we will see you soon.